Welcome back to the Malaysian Money Matters show. It's July 11th, 2025.
And we're ready for another deep dive into the financial headlines that matter.
Exactly. We'll start with Malaysian companies, then look at the bigger international picture and really connect it all back to you.
Sounds good. Lots happening on the local front, especially with IPOs.
All right, let's kick off there. Enproserve Group, they do mechanical and engineering services. They're listing on the ACE market July 18th.
Yeah, they raised about RM 50.4 million, mostly for expanding capacity.
But the public part of the IPO, it was actually undersubscribed, only 0.43 times.
Yeah, that's interesting. But their contracts seem pretty solid, apparently going out to 2029. So maybe less public buzz, but still seen as a stable bet.
Could be. It shows there's still appetite for these specialized services, maybe just a bit more caution from the public side.
And another one.
Oi.
One Gasmaster Holdings, gas detection, industrial hygiene. They filed their draft prospectus also for the ACE market.
Okay, some more niche services looking to list. Their numbers look decent.
Yeah, reported about RM 5.5 million profit after tax for FY 2024 on RM 38 million revenue. Margins improving too. It's another sign of growth in these specific service sectors.
And sticking with listings, but moving to the main market, Wasco Greenergy. This is a spinoff from Wasco, right?
That's the one. Renewable energy contractor. Their plan is interesting. They want to shift towards owning and operating biomass steam power plants.
Ah, so going for that recurring revenue model.
Exactly. And they're looking at Indonesia for expansion too.
Yeah.
This really highlights that growing focus on renewables and finding stable income streams locally.
Okay, moving beyond IPOs, let's talk corporate moves. Avaland, the property developer, big news there.
Yeah, buying quite a bit of land in KL. 3.19 acres for nearly RM 149 million.
And they're planning a RM 900 million mixed-use commercial project on it.
And this is their second land buy from Tan Chong Group this month. Together, that's like, what, over RM 1.2 billion in potential gross development value.
That's significant. Signals major expansion plans in prime spots. A big bet on KL property.
Definitely shows confidence in that market. Then there's NexG.
Right, they're buying an industrial property in PJ for 4M 28.5 million.
Yeah. The goal seems to be boosting production, getting more efficient, consolidating R&D, design, production, all under one roof.
Makes sense. A strategic move for better operations, especially for a tech player.
And propel global oil and gas services. They're looking at a private placement.
Up to 10% of shares to raise cash.
Around RM 6.57 million now. Mostly for working capital, like getting bank guarantees for new project tenders, so funding growth opportunities.
Okay, now for a bit of a contrast. Avaland Holdings. Their latest quarterly profit. Well, it dropped.
Yeah, quite a bit. Down over 40% to about RM 3 million net profit, near a 3-year low. Revenue was down too.
But here's the twist. They declared a higher interim dividend, 5 cents per share, up from just 1 cent last year.
Now that's fascinating, isn't it? Lower earnings, much higher dividend. What does that tell you?
Well, it could be management signaling confidence about the future, maybe. Or perhaps trying to support the share price despite the dip. A bit of a puzzle.
Definitely one to watch. It speaks volumes about their outlook or strategy, maybe more than the current numbers.
Now some tougher news. Ho-Hup Construction. Their subsidiary, Bukit Jalil Development, got a winding up petition.
From the Inland Revenue Board, right, over tax arrears.
Yeah, about RM 23.7 million. Ho-Hup says it won't impact them financially or operationally because the subsidiary is already in liquidation.
Okay, so contained damage, it seems.
Yeah.
Still not great news for the subsidiary itself.
And speaking of potential issues, Jasakita, trading in their shares suspended today, July 11th, pending a major announcement.
Their share price jumped recently, didn't it? Over 21%.
It did. Their last annual earnings were way up because of a land sale gain, but the latest quarter was actually a net loss, so kind of a mixed picture.
Definitely keep an eye out for that announcement then. Could be anything.
And a final one on the challenges front, Sarawak Cable. It's official. They'll be delisted from Bursa Malaysia on July 15th.
Their appeal for more time didn't work out. And the auditors gave that disclaimer of opinion.
For the 3rd year running, that's a serious red flag.
Absolutely. It means the auditors couldn't get enough info to even form an opinion. A real lack of transparency. A tough reminder of the risks with distressed companies.
Okay, one last local item, palm oil. Stockpiles rose in June.
Up 2.41% to 2.03 million tons. Basically, exports fell faster than production did.
So for you, the listener, higher inventory could mean downward pressure on palm oil prices, something to watch if you're exposed to that sector.
Right. Now, shifting gears a bit to the bigger picture, international news, Politics.
Let's do it. First up, Bank Negara, Malaysia. Big news this week, they cut the OPR.
First cut in 5 years, down 25 basis points to 2.75%.
E&M called it a preemptive move. What's the impact for people?
Well, simply put, lower borrowing costs. It could help households, businesses stimulate spending. It's aimed at keeping growth steady with all the global uncertainty.
And it might help the bond market and the ringgit, too.
That's the expectation. Lower rates here, possibly combined with a weaker U.S. dollar later, could attract foreign investors back into Malaysian bonds and strengthen the ringgit in the second half of the year. So, potentially good news for our assets.
Okay, now, global trade. It seems tensions are heating up again.
Definitely. U.S. President Trump announced more tariffs, 50% on U.S. copper imports, 50% on goods from Brazil.
And duties on stuff from the Philippines, Sri Lanka, several other countries, too.
Yeah, 20–30% there. These moves really escalate things, potentially messing with supply chains, maybe hitting consumer prices globally.
And what about the impact here in Malaysia?
It's a direct concern. These U.S. tariff uncertainties cloud the outlook for our tech sector, and the rubber glove manufacturers are asking the government to negotiate urgently with the U.S.
Because of that planned tariff hike on gloves to 25% from August 1st?
Exactly. It's a direct threat to key export industries, so there's pressure to find a solution.
Interesting counterpoint, though. Canada is trying to finalize a free trade deal with ASEAN.
Right, trying to diversify away from the U.S. market because of these very tariffs. It's actually an opportunity for us, for Malaysia and the region, to build stronger ties elsewhere.
Despite all this, some emerging Asian markets seem resilient.
Yeah, markets in South Korea, Taiwan, some ASEAN equities pushed ahead. It seems investors might be thinking these are just negotiation tactics, maybe hoping the final impact won't be so bad. Or perhaps they see opportunities elsewhere.
Let's touch on China quickly. Hopes rising for their property sector.
Sort of. There were unverified social media reports about a possible high-level meeting to revive the sector, caused property shares to jump. But, it's just talk for now.
Still, any sign of tackling the property slump and maybe deflationary pressures would be significant.
Absolutely. If Xi Jinping's government seriously addresses deflation and overcapacity, it could stabilize prices and maybe ease some trade tensions caused by their exports.
Okay, last couple of points. Global trends. OPEC's oil demand view.
They trimmed forecasts for the next few years, citing slower Chinese growth. But interestingly, they lifted their longer-term view.
Saying no peak oil demand on the horizon.
Pretty much. They're calling for significant investment. So, short-term caution, but long-term belief in oil's role. It impacts energy investment decisions.
And finally, tech. AI boom continues.
Looks like it. TSMC Taiwan Semiconductor, their revenue surged 39% in the June quarter. Better than expected.
Fueling that AI spending narrative, especially with NVIDIA hitting a massive US $4 trillion valuation.
Yeah, it just shows the incredible demand for those cutting-edge chips. AI is still a huge driver.
All right, that wraps up our deep dive for today. Staying informed, as we always say, is key to navigating all these shifts.
It really is. From local IPOs to global tariff wars, it's all connected and can ripple down to your investments.
Keep thinking about how these big trends might create opportunities or risks closer to home. For more insights like this, make sure you subscribe to the Malaysia Money Matters podcast.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.